I've been in crypto since 2012. I've made and I've lost, well, more than I care to admit. But after more than a decade in this space, one truth has become crystal clear. Not all stablecoins are created equal. And if you're trying to build a reliable income stream, or just want digital dollars that don't flinch when markets panic, you want to know which stablecoins are solid and which are the ticking time bombs. So today I want to show you why USDC is my gold standard. We're going to go deep, talking about regulation, reserves, resilience, and why Wall Street, Washington, and Main Street are finally waking up to what this stablecoin really is, the future of money. A quick disclaimer before we move on. This video is for educational and entertainment purposes only. Nothing shared is financial advice. I am not a licensed advisor. Always do your own research and consult a professional before investing. A stablecoin is just a digital dollar. Just like you've sent money on Venmo or paid someone through PayPal, except with stablecoins you don't need a bank or an app. There are no bank hours, no international wire delays, no middlemen, just 24/7 money that works anywhere, anytime. You swap $1 of fiat, that's your cash, for a token like USDC, and it stays at $1. That's the whole job. Stability. But what makes it work? Behind the scenes, stablecoins like USDC are backed one-to-one by real-world assets, cash and short-term US treasuries. And that backing is what makes or breaks the trust. Let's talk about risk. Stablecoins are like banks in one way. They hold your money and promise to give it back. But banks can and do fail. Remember Silicon Valley Bank? That was a TradFi institution and it nearly triggered contagion because of bad duration of risk on government bonds. Stablecoins face two major risks: bad investments and bank runs. If a stablecoin issuer takes your dollar and uses it to chase yield with high-risk loans or volatile crypto, you're exposed to bad investments, often without knowing it. And if too many people try to redeem their tokens at once, and there isn't enough liquid capital on hand, it can collapse like a house of cards. That's known as a bank run. The worst case example in crypto's history is Terra's UST. Terra's UST promised 20% APYs that weren't properly collateralized, and when panic hit, it unraveled within 24 hours. The peg disappeared. Billions evaporated. Life savings literally wiped out. But not all stablecoins are built on fairy dust and hope. USDC is issued by Circle, a US-based company that's been building in public for years. This isn't some anonymous dev team in a Telegram group. Circle employs over 900 US citizens, works hand-in-hand with regulators, and has operated with transparency as a core value. So let's break it down. USDC reserves are held in the Circle Reserve Fund, a government money market fund registered with the SEC. That fund is managed by BlackRock. Yes, that BlackRock, the largest asset manager in the world. Funds are custodied at U.S. major institutions like BNY Mellon and Cross River Bank. Reserves are broken down and disclosed every single week. And independent audits are conducted monthly by Deloitte, a Big Four accounting firm. This is not DeFi spaghetti. This is institutional-grade infrastructure. But there have been some problems. In March of 2023, during the Silicon Valley Bank collapse, Circle had about $3.3 billion, roughly 8% of their reserves, held at this financial institution. When the news broke out, panic set in, and the USDC coin briefly depegged to around 87 cents on some exchanges. But instead of collapsing, it recovered within days once the US government backstopped Silicon Valley Bank depositors, and USDC regained its peg without a bailout. That's pretty resilient. In June of 2025, Circle went public under the ticker CRCL, debuting at about $31 a share and raising over $1 billion at a $6.9 billion val. But here's where it gets absolutely wild. Just 2 weeks later, the stock had surged nearly 700%, peaking at around $265 before settling into the $180 to $200 range. This is not just hype. Wall Street analysts from firms like Goldman Sachs have praised Circle's transparency, regulatory alignment, and market share in the stablecoin space. Circle has now joined the ranks of publicly traded fintech giants, and that has opened an entirely new era of credibility. But why is that important? Because now USDC is backed not just by reserves, but by a publicly traded company accountable to its shareholders, accountable to regulators, and accountable to US law. Circle's IPO also came at the heels of the Genius Act, passed by the U.S. Senate in June of 2025. This legislation laid out the clearest stablecoin framework we've seen to date, and Circle was already operating well within those parameters before the ink even dried. Let's talk adoption, because USDC isn't just for crypto nerds anymore. PayPal has launched its own stablecoin, PYUSD, built on the same infrastructure. Shopify merchants can now accept USDC natively. Visa and Mastercard are piloting stablecoin settlement rails. Stripe is integrating USDC for merchant payouts. Robinhood and Coinbase already accept direct USDC transfers. And now even JP Morgan is testing JPMD, a stablecoin-like token on the Base blockchain using Circle's technology. Meanwhile, as of June 2025, stablecoin issuers collectively hold over $120 billion in U.S. treasuries. That makes them, stablecoins, one of the top 20 holders of U.S. debt globally, ahead of countries like Germany, South Korea, and Mexico. If stablecoins move into mainstream finance, think B2B payments, payroll, remittances, etc., this number could balloon. Imagine stablecoin issuers becoming a top 5 U.S. debt holder. That's not just bullish for crypto, that is geopolitically significant. So here are my final thoughts and why I trust USDC. USDC is not perfect. No asset is, but it checks every single box that I care about. It's fully collateralized with liquid assets. It has regular audits and disclosures, U.S. regulatory alignment, proven track record under stress, adoption by the world's biggest fintech and payment players, and it's now issued by a publicly traded company with a multi-billion-dollar valuation. In short, USDC is the closest thing we have to a digital dollar that works globally, 24/7, and without the drama of traditional banks. That is why I personally hold the majority of my stablecoin portfolio in USDC. It's not just about chasing APY, it's about sleeping well at night. And right now, USDC is the only stablecoin that gives me that level of confidence. If you want to learn how I use USDC to earn consistent income without losing sleep, subscribe and follow along. This is my blueprint for building wealth in the digital economy. Till the next time, I'm the Stable Lad.